The real estate market is such a key part of the US economy. So let's first focus on single-family residential homes. For many of us, our home is one of our most valuable assets. Housing affects consumer confidence, consumer spending, borrowing, and is directly tied to a lot of major industries like banking, raw materials, construction, et cetera. And a lot's been going on in the housing market. So the last 2 years, obviously, we've had tremendous growth in home prices with low inventory, low interest rates, a lot of people on the move. A lot of us have anecdotes, like I know I do, about people offering to buy your home, calling you, or sending you a letter offering to buy your home sight unseen, above market value. However, that's all changing. With interest rates up now, mortgages have more than doubled in just the last year, which has a tremendous impact on monthly payments and really limits affordability. So let's look at an example to see how this plays out. For example, if you take a house that sold for $500,000 just 1 year ago and you assume a 20% down payment with a 3% mortgage, which is what you could get at a fixed rate for 30 years just a year ago, that translates to a monthly payment of $1,686. Fast forward to today, 1 year later, if we assume a 15% increase in the sale price, which is about the national average, if you can still make that 20% down payment, you're now looking at a mortgage just under 7%, which is a monthly payment of $2,968. So that's a 76% increase for the same exact home as 1 year ago, which in dollar terms is almost $1,300. And so extrapolate that across the nation, and that's what you're seeing in the housing market, which really puts a cap on demand and is going to really slow things down, and you're probably going to see a lot of price drops across the country. With that said, we don't think this is an all-out crisis like 2008. There's several reasons we think that we're in much better shape overall. So number one, consumers have much better credit than they did back then. Number two, homeowners have a lot more equity cushion. And then three, banks are much better capitalized. So while we don't think it's an all-out crisis, we do think that there's going to be some major challenges ahead for the housing market, and you're probably going to see prices fall in many regions across the country. I also want to talk about commercial real estate, because when we think about how we invest in real estate, it's generally done through commercial. And that consists of office buildings, retail, so stores, multifamily, which is apartments, and then industrial, which is manufacturing facilities and distribution centers. And the big question around that is, with higher inflation, is real estate still a good investment as an inflation hedge? And the short answer is yes. Real estate, particularly private real estate, has performed quite well lately. You've had property values rising, you've had leases getting renewed at much higher rates, and a lot of the time within leases there are inflation escalators, so that automatically adjusts upward with inflation. So overall, commercial real estate has done well. One caveat that I should throw in is that there can be really big differences in public real estate, which is real estate companies that trade as stocks, versus private real estate. So implementation matters. It really matters how you invest. But overall, especially focusing on the private side, real estate has held up well with higher inflation.